Hey everyone, welcome back to Corporate Decoder, the place where we expose the juicy secrets hidden in plain sight within company filings. And let me tell you, Quantum Corporation's latest proxy statement is serving up some serious drama. We're talking about a company in a major turnaround situation, navigating some tricky financial waters and a whole lot of changes at the very top. You might want to buckle up for this one. So Quantum Corporation is basically telling its shareholders, hey, we're having our annual meeting and we need you to approve some pretty important stuff. Think of this like a shareholder report card and a look ahead. At its heart, this filing is about what the company wants to do to get its financial house in order and set itself up for future success. They are asking for your vote on a bunch of proposals that could significantly shape the company's future. The company is bringing in some fresh leadership, or rather some leadership that knows the company inside and out. Hugues Merith is back as President and Chief Executive Officer. He says coming out of retirement feels like fate, and he has a long history with Quantum going back to the 1990s. He sounds really passionate about turning things around, focusing on unstructured data and AI. Don Jaworski, the chairman of the board, is also signaling a new direction emphasizing fiscal year 2026 as a year to leverage recent changes and build a better future. They really want shareholders to support the proposals to continue this transformation. Now let's talk about the big financial stuff. Quantum is proposing to issue what they call senior secured convertible notes. Essentially, this is a way to restructure their debt. On the 23rd of September 2025, they entered into an agreement with their lenders, including a company called Dialectic Technology SPV LLC, or Dialectic for short. They want to swap some of their existing debt for these convertible notes. This is a crucial part of their plan to improve their balance sheet and get more financial flexibility. They really need this to happen to continue as a going concern. If this debt exchange proposal isn't approved, the company might not be able to meet its debt obligations, which could lead to serious problems. Looking at how the company has been performing over the last few years, things have been a bit of a roller coaster. In fiscal year 2023, they had a value-adjusted burn rate of 4.73%, which is quite high. This means that for every dollar of revenue they had, they were spending a significant portion of it. Then in fiscal year 2024, it dropped to 2.36%. And in fiscal year 2025, it went up again to 9.55%. That jump in fiscal year 2025 is a flashing red light. It shows that while they might be trying to control costs, the burn rate is increasing again. This is not a good sign for a company trying to turn around its financial situation. It suggests that expenses are growing faster than revenue, or that they are making significant investments that aren't yet paying off. When we look at executive compensation for fiscal year 2025, we see some large numbers, especially for James J. Lerner, the former president and chief executive officer. His total compensation was $1,493,653, Kenneth P. Janella, the former chief financial and operating officer, had $1,048,729, and Brian E. Cabrera, the former chief administrative officer, had $987,373. These numbers include salary, bonus, stock awards, and other compensation. Now, while executive compensation is often substantial, it is important to see if it aligns with the company's actual performance. In fiscal year 2025, it looks like none of the company's short-term incentive plan targets were met. This means that despite the compensation paid to executives, the company didn't achieve its stated financial goals for that incentive plan. This filing also talks a lot about equity compensation plans and increasing the pool of shares available for grants. Specifically, they want to amend and restate their 2023 long-term incentive plan to add 140000 more shares. They argue this is necessary to attract and retain talent, especially with recent leadership changes, and to manage cash flow by perhaps compensating their chief restructuring officer with equity instead of cash. They've also removed individual annual award limits for employees and consultants. This is a significant move, and they estimate this additional share reserve will only cover their needs for about 1 year. It means they'll likely be back asking for more shares again soon. Looking at the outstanding equity awards at the end of fiscal year 2025 for the named executive officers, we see significant potential future payouts. For James J. Lerner, the market value of unvested shares in units was $332,075 as of the 31st of March 2025. Kenneth P. Janella had $255,245 and Brian E. Cabrera had $197,725. It is important to note that these figures are based on the stock price at that specific time, and that there were also performance-based awards which could increase these values if certain conditions are met. Now, about that major shareholder Dialectic Technology SPV LLC, they currently hold 16.5% of the company's shares. This is largely due to that forbearance warrant they received. What is really interesting is that if the convertible notes are fully converted and that warrant is exercised, Dialectic could end up owning over 50% of the company. That is a huge shift in ownership and control. This is why shareholder approval is so critical for these proposals. John Fickthorn, a director of Quantum, is also the managing partner of Dialectic Capital Management, which advises Dialectic. This creates some clear related party interests that the board's special committee and audit committee have had to carefully review. We also see a change in auditors for fiscal year 2025. Their auditor Grant Thornton LLP billed $3,738,400 in audit fees. However, Quantum is now proposing to appoint Conresnick LLP as their independent registered public accounting firm for fiscal year 2026. This is a pretty significant change, and often auditors are changed when there are concerns about past audits or a desire for a fresh perspective, especially after financial restatements which Quantum has had. So what is the verdict on Quantum Corporation? They are in a critical phase. The leadership changes and the proposed debt restructuring are positive steps aimed at stabilizing the company. However, the rising burn rate and the fact that they didn't meet their incentive plan goals in fiscal year 2025 are concerning. The increase in shares available for equity awards is also something to watch closely, as it could lead to significant dilution for existing shareholders, and they'll likely need more again soon. The heavy reliance on equity compensation to attract and retain talent, combined with not meeting performance targets, raises questions about the effectiveness of their incentive structure. The close ties with Dialectic and the potential for them to gain a controlling stake means shareholders need to carefully consider the implications of approving these proposals. My take is that Quantum is making a bold attempt to navigate a very challenging financial situation. The new leadership seems determined, but the underlying operational and financial weaknesses are significant. The success of their turnaround will depend heavily on their ability to not only manage debt, but also to generate profitable growth and execute effectively on their strategy. Whether they can do that while also managing employee retention and shareholder dilution remains to be seen. Alright, that is our breakdown of Quantum Corporation's latest filing. What do you think about these moves, and do you believe Quantum can turn things around? Let me know in the comments below. If you found this dive into their financials and corporate strategy useful, hit that like button and subscribe for more deep dives into the world of corporate finance. And as always, you can join our community Discord linked in the description for more discussions and to connect with other corporate analysis enthusiasts. Thanks for watching. See you next time.